And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good afternoon. Welcome to a bit of a surprise recap on a Thursday here, December 8th. My name is John Oakland. Thanks for stopping by and spending a little time after the close with me. Markets, for all intents and purposes, pretty much closed for the day. We'll take a look and see what happened. Finally, we get an update in U.S. stocks, snapping a 5-day losing streak. E-mini S&P's unofficially up 30 points, 0.75%. The NASDAQ up 146 points, 1.2%. And the Dow, again, unofficially up about 180 points, 0.5%. Crude oil continues its slide to the downside, but does slow its roll a little bit. 71.46 is settlement in crude oil, down 55 cents or 0.76%. Stocks, again, snapping a 5-day losing streak. We got crude closing lower, but again, seemingly slowing the roll. As far as news is concerned, as far as the U.S. House of Representatives is concerned, they've passed an $858 billion defense spending bill. Now, that's got to go off to the Senate for approval, and then, of course, off to the president. So that's really the only important news that I saw, kind of looking through things here prior to the forecast or the recap here. Again, usually we'd have the podcast today for reasons beyond our control. They were unable to get the podcast out today, so they asked me to do the recap, and I'm very happy to be here with everyone, as always. Make sure you hit the lucky like button, share, comment, question, feedback, heckling, and love are always welcome on the recap, forecast, everything we do here. Again, hoping you had a good trading day. I think a little bit disappointing as far as possible continuation to the upside in the equities, but we'll take what we can get, right? We've got to trade what we see and take what the market gives us. Successful day, again, in Make Hogue Money this morning. We had a couple good, decent winning trades, one losing trade, positive by the end of the session. So we're very happy with that. And again, thank you all for attending and those of you that participated. It's always a pleasure. All right, John. Spencer, another shifty range-bound day. Interesting adjective there for you, Spencer. It's good to see you. Randolph, the Randolph to my Mortimer, is with us this afternoon. It's good to see you, my brother. Love you. Haggle Matters, good to see you. George, Vince, Anne-Marie Band is with us. Hello, Anne-Marie. It's our pleasure to have Anne-Marie join us, I should say, next Tuesday at 9:30 a.m. Central Time for a special edition of Make Hogue Money. We're looking forward to having Anne-Marie with us. Naveen, good afternoon. We had a little sideways chop today, right? Joe and Vince, John Kashkari. I think you mean Neil Kashkari, right? Of course, we don't have any talking feds this week. They are in a gag order for the week before FOMC meeting through the FOMC meeting, which again is a week from yesterday. A lot of folks, anticipating and probably posturing and hedging for next Wednesday's FOMC meeting. So, well, we're going to take a look at what we see in the charts here, what we were thinking about earlier, how things finished out today, as usual. Let's start here. We'll go right to left in clockwise fashion, if you will. We'll start with crude this afternoon. Here is the daily in crude. We've got some continuation to the downside. Of course, The market slowing its kind of downside a little bit here. If we remember a couple of weeks ago, or maybe even last week, the White House says if crude oil gets down to about 70, they're going to start to replenish the strategic petroleum reserve. So it seems to make sense that price seems to be slowing as we get closer to that level. We did have an increase in open interest yesterday on decent volume. The downside auction is continuing to present as healthy to the downside. We're bringing in volume, open interest. Today we had a long overnight inventory that got squashed relatively quickly and then just kind of falling into range. Tomorrow is Friday. We have to remember that, because when we take a look at what we did this week, we've come kind of a long way here, right? Here's the 5th, the 4th. Here's settlement from last Friday. We've come pretty far to the downside. Not suggesting that we've got a whole lot of people in profit here, but it is quite possible that we could see some kind of short covering tomorrow, being Friday. You have to see how things go, of course. See what the open interest looks like after today's session. Here's the E-mini S&Ps. Okay, well, we did discuss this morning before the open how we kind of felt as though the short time frame downside auction has been struggling to bring in new business. We've seen more open interest cut off than adding on this push to the downside. So that makes the health of the downside auction a little suspect, at least to me. We had lower volume yesterday. We had only a 1,600 contract increase in open interest after, several, I think a couple, 20,000 open interest loss on this push to the downside. So it's not like we had new business placing short bets here in this move to the downside. It's more like we had some long liquidation, folks maybe taking profits or cutting losses as the market moves against them. We're still looking at possibly a longer time frame market state change here. But typically when we see a market state change of this possible magnitude, we're going to see a lot more volume. We're going to see a lot more open interest increasing in these moves to the downside than we have typically seen. So if that is our hypothesis, if that is what we're thinking, feeling, seeing in the markets, is that this downside auction is not doing a very good job, then what can happen is it can fall into range, or we can get a decent pullback in the opposite direction, which to a degree I think is what we got today, although the regular trading hours, once the range was established, was a little bit choppy and a little bit range bound. Let's take a look. So we did open with an overnight inventory to the long side. There was one thing that came out shortly after the open. The FTC said it was going to sue Microsoft over Activision as early as today. So there was a little bit of a shock, of course, in the technology sector that may have had something to do with our pullback back to settlement to even out overnight inventory. It was really quite short-lived. Then we get the move back to the upside. We were in Make Hogue Money thinking there could be a lot more upside momentum to this move, but just did not pan out, falling into range bound. As our good friend Spencer says, shifty range bound day. Take a look at the NASDAQ. Finally, we get some play with the weekly kickoff level here. This is a very similar market. It's the same asset class as the S&Ps, but it's presenting a different story. While the S&Ps had more of a upside structure, the NASDAQ still range bound. Looking at last week's low as the lower extreme of that range, we've been unable to accept below it. So now finally, after actually some decent open interest increasing to the downside, we see a move in the opposite direction. The market is looking like it has settled, in essence, right on our weekly kickoff level. Does happen sometimes. Sometimes they are repellent of price. Sometimes when they are approached, they become magnetic to price. Now, there was the first time up, one decent short that hopefully some of you were able to take, but if you fell in love with it, it wasn't a very long time frame move or opportunity to take profits off that level. Adding 3,000 in open interest yesterday alone. The market is the downside auction did present as a little bit healthier than the S&Ps, but again, still range bound, not necessarily directional to the upside as the S&Ps. 1, 2, not a very strong trend line, only 2 points of contact here. But again, when we see these confluent levels, like we have this trend line crossing weekly kickoff low, that is something that I'm going to look for a more powerful move, which just did not materialize. So, the equities, I think in general, did a poor job in this last push to the downside of bringing in new business. And that's what it takes to move markets to new levels and new market states is new business. It seems as though even with the increase in open interest, it's more old business taking themselves out than new business putting themselves in. Anyways, I sometimes yammer too much. So, overnight inventory reconciled. Buyers come in. The first time we get up to this level here, 9 o'clock, we were in Make Hogue Money. There was a question on the YouTube side that says, do you take it right away or do you look at it and see what happens? And the first time up, it stopped right on weekly kickoff and then had a nice pullback to the downside, which would have been a nice trade. But if you held on too long, it got kind of taken away. The rest of the session kind of focused on weekly kickoff. We've got highs up against it. We've got a low right here down to it, another high at it, another low right on it, and basically finishing the day right at it. So our weekly kickoff level, instead of becoming repulsive, became magnetic. It has a very magnetic personality. At least it's not repulsive. But it did not provide great, bigger opportunities, which they're basically designed to do. You don't know what's going to happen. One of our big acronyms here is ACH. Anything can happen. So we are sitting here right at weekly kickoff level. It might provide some opportunity for us at that level tomorrow. But the longer it hangs around there, the less power it's going to have over the vision of traders. Here's the gold. Volume was pretty good yesterday. We had it only 600. This market is coiling. It is shrinking and probably building energy for some sort of move in the future. We got 1, 2, 3 maybe points of contact, 1, 2 points of contact. We're putting in on the higher highs and we're putting in lower lows. Range bound, nice stackable range here, still in it, still in the middle of it. So talked about that this morning. The range is right in the middle of weekly kickoff high and low, right in the middle of the current area of balance. Typically not the best area for us to trade. We did find a decent trade to the upside yesterday. Today, maybe not so much. The market opens, closes the gap if there even was one, just kind of falls range bound. Tough day today, right? Trading gold. The one thing I do want to point out is when we're in the middle of a range bound area like that, it tends to be shorter time frame traders in control of the market, which they're looking at shorter time frame levels. When we've put in the low here, it's right at value high from yesterday. Looks like almost to the tick, right? So when we are looking at a market that is likely to be short time frame controlled, as I believe we are, because again, we're right in the middle of the area of balance that we've been in, this is, kind of typical. The problem is there's usually so many short time frame levels, it's hard to know which one it's going to respect. It could have respected settlement. It could have respected the high from yesterday and then pushed to a higher range. Instead, it took a look down to value low from yesterday and then found its range. Where did it trade to the upside? This relatively close to this high, just kind of threw it up there. Is there a weak high on the upside here on the TPO chart? Yes, it does look like that is the case. So we don't have a very strong high. This is indication of an unfinished upside auction in short time frame control. So we have excess at the low, no excess at the high. We'll keep an eye on that tomorrow morning to see if that gives us any indication of potential direction. Euro. Boy, did the dollar take a little bit of a hit today? I haven't checked that out lately, but it would appear so. Back down below 105 at 104.8. So yeah, the dollar did take a little bit of a hit today. So it makes sense that the euro has found some legs to the upside. Just thinking about what we were talking about this morning. We've been seeing open interest pouring into the upside with relative consistency, including yesterday, which was an additional 15,000 contracts in open interest. I'm going to check the final to make sure that that is correct. It seems kind of big. It's more like 13.5 we added yesterday, but still a relatively substantial number. Now, we are coming into rollover for equities and for the currencies. Rollover for the equities is scheduled for this coming Tuesday, the day before the FOMC meeting. This is going to make things a little bit interesting and a little bit, spicy, if you will. The day after that is currency rolls. So we're going to lose some of the vision of open interest over the next few sessions and through next week as we go through rollover. There's going to be splitting volume between the front month and the next month. There are going to be longer time frame traders focusing more on getting their rollover done cheaply than being concerned about directional activity. Don't let me kid you, they will become directional if forced to become directional. So this is going to be tomorrow, Monday, Tuesday, Wednesday, of course, is going to be a zoo, possibly because of the FOMC meeting. We don't know. It could end up being a big nothing burger. I highly doubt that, but it could. So currencies, equities in rollover. Markets are going to go too far. Price won't go far enough. When you find the right answer, the market is going to change the questions. It's going to be an interesting next week of trading. Don't mean to scare you, but a lot of directional scalpers, a lot of directional traders back in the pit in the day, if they weren't trading the spread, if they weren't working the rollover, they were taking the time off about 2 weeks around rollover. Here was what we did in the euro, however, in the 30-minute chart, as the dollar continues to kind of waffle to the downside today. Of course, the euro starts to waffle to the upside. What about yesterday? What about that 13.5 increase in open interest yesterday? What direction did that come in at? Where was the volume? Look at the volume. Not all that great. Not all that great. Most of the regular trading hour session yesterday was to the downside. I find that very interesting. We had this bull flag looking for continuation, which just didn't happen. Did we add shorts yesterday? It's entirely possible. Instead of adding to continuing longs, is yesterday's big jump in open interest more rollover related? Will Laura and Luke run away together? Stay tuned to As the Market Turns. We don't know. We can't tell. We can't see. Rollover does complicate things that way. What about the 10-year? We're through rollover in the treasuries. We're still holding really good upside structure. This inside extended trading hour range today doesn't worry me. Although we did lose 20,000 contracts yesterday on this push to the upside, I want to make sure and take a look and see if the final agrees with that. We lost more than that. We lost 24,000 contracts on this push to the upside. You may be squeezing out some shorts. Kind of a bull flag here. Maybe we got a little too short in the hole here. Inside regular trading hours, we did look at the possibility that the best trading position, the best trade location of the day, maybe later on in the session, which did not ring to be true, but relatively close. I mean, we did put in a low here and almost got back to where we opened. So the best trade location of the day did happen very early in this session today. Just because it does open in range and in value doesn't mean that it can't happen. It's just higher. It's just a lower probability of the best trade location of the day happening very early in this session. Boom. All right. The fascinating, challenging, and desperately scary natural gas. Well, we still have our island down here. The weekend gap remains. It was an effort to go close that gap today, which did not succeed. Today's regular trading hour also created, to a degree, an island. Here's the weekend gap. Here's the last 3 days. We gapped up above yesterday's regular trading hour range, and we were unable to close that gap. Unable to close the weekend gap. What are we looking at? Losing 7,500 in open interest off the low here. We got too short. Obviously, that could be one of the things that we can make an assumption of, but we can always be wrong with that. I was going to be focusing on the extremes of the last 3 sessions today. Would that have helped me today? Maybe not. At least initially, we did get a pullback off of the overnight high here. We looked above it a few times and got a pullback. Once we broke out above it, I think it was Katie bar the door. But again, still unable to close the weekend gap. We did put in a week high. Look at the TPO chart. This, my fine feathered and furry futures friends, is a unfinished upside auction. No excess. No excess at the high. Excess. It's fighting me. Excess. A little bit of excess. Late spike. Market did accept lower for the day that day. So if we're thinking about any nuances that may carry forward into tomorrow, we did not complete the upside auction today. Even though it pulled back, we have an unfinished upside auction at the high of the profile today. You see if that causes anything to change for us tomorrow. Stay tuned again to as the market turns. As the market turns. All right. Naveen, on ES, would you say that we are going for the ascending trend line test, possible failure from there? It is entirely possible, Naveen. I just saw that. Sorry that I didn't get that to that in the charts. But yeah, that is entirely possible. It is one of the hypotheses that I will probably be looking for to come true, when we do our homework, we've got to take a look at the tools that we use, the lens that we use. Everybody has their own lens, their own tools. But once we get an idea of what we're thinking about possible outcomes of the trading day, we've got to set up hypotheses as to there's hypothesis 1, there's hypothesis 2, there's hypothesis 3. If hypothesis 1 starts to ring true, we should have a strategy in line and ready to respond to that hypothesis. If that one doesn't work, it looks like hypothesis 2 is working, there should be a strategy ready for you to respond and respond correctly and relatively quickly to the change in the hypothesis that seems to be ringing true. There's days I'll have 3-4 hypotheses and none of them will ring true. Well, those are days I go golfing or I go shovel snow or I go hang out with the dog or do something else. If I have that opportunity, I do have a lot to do during the day, so I just focus on that. But the hypothesis is really how I kind of frame the possibilities for the day, and if one of them comes true, then I've got a strategy that I'm going to be using according to that hypothesis. On this day in 1993, the NAFTA agreement signed into law. Yikes. 1940, the Bears beat the Redskins 73-0 in the NFL championship game. I kind of wish that they had beaten the Green Bay Packers in that game 73-0. And in music, it's kind of a sad day for music. 1980, on this day, John Lennon was shot and killed in New York. Very sad day. In music, of course, many people deeply affected by that. On this day, Frank Sinatra Jr. was kidnapped at gunpoint from a hotel in Lake Tahoe. He was released 2 days after his father paid out the $240,000 ransom demanded by the kidnappers. I had no idea that this even happened. They were captured and sentenced to long prison terms. The folks that were the kidnappers there. A couple of interesting birthdays today. Sammy Davis Jr., the Candyman. Jim Morrison's birthday is today. He was born in 1943. Greg Allman's birthday is today. We all know Greg Allman from the Allman Brothers. Marty Friedman from Megadeth. Nicki Minaj's birthday today, for some of you youngins. And that's going to be it for me. Again, thank you all for joining me today, and get a good night's rest. We do have one economic release tomorrow that could throw a horseshoe into anything. The PPI final. We also have consumer sentiment. So maybe a couple of things that could throw a horseshoe into anything. Wholesale inventories, that's a preliminary number also. So 7:30 tomorrow morning Central Time, PPI final demand, consumer sentiment, and wholesale inventories tomorrow at 9 a.m. Central. So it's going to be another challenging trading day tomorrow, so make sure you get some rest. We work hard at this. Be good to yourself. Be kind to others. Say a prayer for peace. Get yourself a Old fashioned tonight. Relax, enjoy your family and friends, and I'll see you tomorrow morning for the market forecast. Friday tomorrow. Capital preservation, top of my mind. Have a great night, everybody.